everyone is calling it a crash. Headlines are screaming that silver collapsed to $64, that the rally is over, that the bull market failed. But what if I tell you this drop was not a reversal at all? What if this move was actually the final shakeout before the real explosion begins? Because if you understand what just happened in silver, you might realize that most people are about to be left behind. Again, stay with me, because the next few minutes could completely change how you see this market. Right now, fear is doing exactly what it always does at major turning points. It convinces weak hands to sell at the worst possible moment. When silver pulled back to the 64 area, social media instantly flipped from euphoria to panic. Influencers who were bullish at 70 suddenly turned bearish. Retail traders froze, but experienced money did something very different. They stayed calm, because this kind of move is textbook behavior in a blue sky breakout environment. Before we go deeper, if you follow silver, gold, or macro markets, make sure you like this video and subscribe to Prime Finance Hub. It really helps the channel grow and ensures you don't miss what's coming next in this historic metal cycle. Now let's slow this down and look at reality instead of emotion. Silver did not crash because something broke. It pulled back because markets don't move in straight lines. When an asset breaks into blue sky territory, meaning there is no historical resistance above, price often makes sharp advances followed by violent pullbacks. These pullbacks are not weakness. They are pressure releases. They exist to remove leverage, shake out late buyers, and reset sentiment. The $64 level was not random. It aligned with prior breakout zones, key moving averages, and heavy institutional interest. That area acted like a magnet. When price came down, liquidity was absorbed almost instantly. There was no panic volume, no structural breakdown, no long-term trend violation. What we saw was a controlled retracement inside a powerful up. Think about who benefits from calling this move a crash. It's not the long-term investor. It's not the institutions accumulating physical silver. It's the crowd that reacts emotionally to red candles. Smart money understands that corrections inside bull markets are where real positions are built. Silver's fundamentals did not change at $64. Global supply is still tight. Industrial demand continues to rise with AI, solar, defense, and electrification. Governments are still running massive deficits. Real rates remain unstable, and central banks are trapped in a cycle they cannot easily escape. None of these forces reversed because price dipped for a few sessions. Historically, silver has always been brutal during its strongest phases. It moves fast, shakes confidence, then explodes higher when most people least expect it. In previous bull markets, silver regularly pulled back 20 to 30% before doubling again. These drops felt scary in real time, but on the chart years later, they looked like small pauses before massive runs. Another key point most people miss is sentiment. At the top of real market reversals, optimism is extreme and persistent. During this drop, fear spiked instantly. That is not how tops behave. That is how continuation patterns behave. Tops form slowly. Corrections are fast. What we just saw was fast. Now let's talk about the bigger picture. Silver is no longer just a precious metal trade. It's a monetary asset, an industrial necessity, and a geopolitical tool. Countries are stockpiling resources. Supply chains are fragmenting. Trust in paper systems is being questioned. In that environment, silver's role becomes larger, not smaller. The blue sky breakout remains intact because structure remains intact. Higher lows are still holding. Long-term trend momentum is still positive. The move to 64 did not violate the trend. It tested it, and strong trends survive tests. This is why experienced investors don't chase green candles and don't panic on red ones. They zoom out. They focus on structure, not noise. They understand that volatility is the price you pay for outsized returns. At Prime Finance Hub, the goal is not to hype every move or skid you out on every pullback. The goal is clarity, and clarity right now says this was a reset, not a reversal. Ask yourself this simple question. If silver was truly entering a bear market, would it fail quietly on low volume, or would it break violently, destroy support, and stay weak? So far, none of that has happened. Markets are psychological warfare. The strongest moves always feel uncomfortable. The biggest gains always come after moments of doubt. This pullback created doubt. That's exactly why it happened. As we move forward, price action will tell the story. If silver reclaims momentum, the same voices calling this a crash will suddenly call it inevitable. That's how markets work. Late reactions, not early understanding. If this video helped you see the bigger picture, drop a comment below and tell me what level you're watching next. Share this video with someone who panicked on the dip and needs perspective. And stay connected with Prime Finance Hub, because this silver story is far from over. The noise will fade, but the trend is still alive.